I've heard you say in past interviews and to me as well that, for you, blockchain is an unstoppable force and technology. But, whether this rally is sustainable or not seems to be the only thing on most investors' minds.
Yeah, I think that the big issue that a lot of people think about is the exchange rate between dollars and Bitcoin. And I think that's probably why Bitcoin's performance surprises a lot of people, even as mature as it's getting, that it's well over $1 trillion market cap, and yet it still runs around like a teenager startup. That because people focus on the dollar value of it, and because there's only 900 Bitcoin a day being mined on average. I know some days it's a little less, some days it's a little more based on the speed of the miners. But in general, only 900 new Bitcoin a day, and therefore the dollars chasing it, it becomes a bit of a self-fulfilling prophecy that if you're concerned about the price going up, you buy some and the price goes up.
Eric, I don't want to be giving away any spoilers from your upcoming webinar this Wednesday, Beyond Bitcoin. But typically when a disruptive technology hits a 10% adoption, we usually see, a rapid adoption, more so over the course of the next few years. So what do you tell a new investor entering this space who might have trouble handling the volatility here?
You need to make sure that you invest speculative money at first while you're getting to know it. And I know there's a full spectrum of Bitcoin believers. There's just as many people who think they'd rather have more Bitcoin than dollars as there are people who think 1% is the right number to start with cryptocurrencies. But if you look beyond Bitcoin, kind of our catchphrase for the webinar, and you look at the technology, because Bitcoin is it's Bitcoin, it's unique, it's got all kinds of wonderful facets to it. But the technology that was spawned as a result of that, I think that's where people should start thinking of it as, where can I place this in my portfolio with a disruptive technology? And to do that, you have to start with investing in Bitcoin or some of the other major cryptocurrencies. So you start off with a small position, even if it's $100, and you get to know it. And then maybe 500 or maybe 1% of your portfolio. And sometimes we even tell people, if you just really can't fathom, where do I start with this? Then think of, if you heard the greatest pitch for the greatest small cap startup, speculative, I'm willing to risk losing this money because it's going to go 500% kind of money. How much would you put into that kind of a position? What would you put into one tiny speculative position? And for some people it's $1,000, for some people it's $5,000, but maybe start with that so that it looks like another high-tech speculative position in your portfolio, and grow from there.
Absolutely, that's a good way to look at it. But Eric, you also have a rule of thumb for when you triple.
I do, and we actually have a lot of debates when I'm talking to people about this, whether it's a great rule, whether it's opens us up to other interpretations. And in a nutshell, the rule is, when your cryptocurrency triples, you sell a third. And here's where the debate starts, is because the idea being, if you put, let's say, $10,000 in something, and that's the right position size for you. And the idea, we're buying these because we expect to make gains. So if it triples, then your 10,000 is turned into 30,000. And we say, okay, so sell a third of it and get your 10,000 back out. And you can imagine all of the possible conversations people might want to have with this is, does this mean you're selling your winners? Because we all know you're not supposed to sell your winners. You let your winners run. Yeah. And another one is, well, it's all my money, right? Like you don't tell me that taking 1/3 out is me getting my money back out, because if I have $30,000 in something, it's all my money. But if we stick to our guns on that, one of our other rules of thumb is, I want you to be in a position where the position size matches your risk tolerance. And that's hard to do with something that if 10,000 is the right amount and now you're sitting on 30, what do you do? And I also want people to be able to remain unemotional, because maybe the two outliers that come up on this is despair on the one end if you're dead wrong and your position really, really goes against you, or elation or euphoria. You see a lot of people that make decisions at the euphoric periods of the market when everything looks like it can't do anything but go up. Don't make a decision based on that. You can make a decision at that time, but not based on that. So how do we keep ourselves from being, yanked around back and forth by the volatility, as well as stay unemotional, as well as try to match our position size with our risk tolerance? Yeah, when something triples, we sell a third of it and we move that money either back into your principal or a store of value to be redeployed later, like gold or something like that, or if need be, then into a stable coin or something. Most of the time it goes back into Bitcoin, though. If we buy a tiny crypto and it rockets up, then we'll sell a third back into Bitcoin.